Hello and welcome. The International Monetary Fund, in its latest regional economic outlook, has focused on several issues, not least of all certain headwinds in the Asia-Pacific region. What are those headwinds? What are they linked to? And what really is the impact on the India story? We have a wonderful guest with us. Krishna Srinivasan is director of the IMF's Asia-Pacific department and joins us now. Thanks very much for being with us. Let's talk a little first about the India story. From 2020 when COVID hit India and of course the rest of the world very badly, where it was negative 6.6 in terms of GDP growth, India had a sizable recovery to 8.7%. But that's gone down somewhat to 6.8, and you're projecting 6.1 in 2023 before it goes up slightly. Now, among developing economies, India's story is still quite positive. Some would suggest very positive. But do you have any concerns about that growth trajectory?
So again, thanks, Vishnu, for having me. So if you look at the number for 2021, that's a bounce back from the 2020 low growth, right? Yeah. So one should put that in perspective. So given that growth has moderated and we expect 6.8%, we project 6.8% this year and 6.1% next year. Now again, we say that with caution, the downside risks are significant, and it's just not domestic downside risks, but also external. Right. If you look at what's happening in the rest of the world, financial conditions are tightening, and partly because advanced countries, central banks are tightening monetary policy. That's having impact on financial conditions in all of Asia. You have the war in Ukraine, which is still not behind us, and that's putting pressure on the external accounts. It slows down demand. One surprising thing what we've seen is in the first half of this year, external demand was quite strong, coming from Europe and Euro area. And China was a slowing factor. Yeah. Now, going forward, we see that all external demand is slowing down. Right. So those are headwinds for India too. Right. So while 6.8% this year and 6.1% this year, there are downside risks which we have to take into account.
Yeah, let's talk a little bit about, firstly, China. Now, what you've actually said is that the Chinese economy has been at a near standstill situation. If you look at their growth forecast in 2022, it's the second lowest since 1977. Just in terms of the impact on India, how do you see that? And then let's talk a little bit about the impact on the rest of the world.
So we have projected growth for 3.2% for China for this year, going up to 4.4% next year. And now the reasons are twofold, actually threefold. The two of those come from domestic factors. Now in China, we have the zero-COVID strategy, which is quite stringent, and that continues. Which has led to many disruptions in activity, mobility, and so on, which has been a big headwind for growth. The second factor in China is a stress in the real estate sector. Yeah. This has been a lingering concern. This sector accounts for a lot in terms of value added in China, and the fact that sector continues to be in stress for such a long time is again a major headwind. In addition to that, China faces the same kind of external headwinds other countries are facing, which growth slowing in the US and Europe. Now, again, you asked about the implications for Asia and India. Now, don't forget that intra-regional trade in Asia is about 50%, right? And a large part of that is China. So with China slowing, that export dimension kind of is affected quite significantly for all of Asia, including India. And if you couple that with the fact that the US is slowing and the Euro area is slowing, Asia exports 25% to the US, 20% to the Euro area. You put all these three countries slowing, that has significant bearing on prospects for exports and growth across the region, including India. That's why I said the significant headwind coming from slowing of external demand.
A lot of this also has to do, of course, with the crisis in Ukraine right now. And in terms of the impact on Asia, and you spelled it out, India, Nepal, and the Philippines, all have been hit hard by a spike in world food prices, fuel prices, shortages of fertilizer. The Ukraine war, unfortunately, continues to linger. Right. This being the case, how is it impacting the region and how is it impacting India?
So again, if you look at starting in February, commodity prices all shot up. Now, many of them have come down, since then. But what that meant was that there was a terms of trade shock for many countries in the region, especially for commodity importing countries like India, like Philippines, and the opposite for commodity exporting countries like Indonesia and Malaysia and so on. Now, in addition to the fact that commodity prices have gone up, headline inflation went up across the region. What's more troubling is core inflation, which has also started rising. In fact, it remains above targets across most countries in the region. Now, what does it mean? It means that monetary policy needs to remain on a tightening stance. Now, Vishnu, again, in addition to the fact that core inflation has risen, the other two worrying factors is our analysis finds that core inflation is more persistent now.
Right.
And number two, pass-through from exchange rate movements is significantly higher now than it was in the past. So both these reasons, inflation is going to be a big concern, continues to remain a big concern, which has implications for policy, monetary and fiscal.
Talking about monetary policy, we've seen India raise basis points substantially, 190 basis points since 2021, June 2021, and the Philippines 225 basis points, right? Is this the way to go forward? I mean, in the situation that countries like India find themselves in, do you believe that this is a rational and progressive strategy?
I think it's very important for the simple reason that inflation, number one, runaway inflation is inimical to growth, macro stability, and so on. It's also the worst kind of tax on the poor. So we have to address inflation head on, and that's why monetary policy needs to be tightened. I mean, let's not forget that inflation 2021 in Asia was pretty muted. So central banks were not so much in a tightening mode. Come 2022, after the Russia's invasion of Ukraine, commodity prices have increased. Now you see it's broadening to core inflation. So monetary policy is on a tightening stance across most countries. In fact, I think except for Japan and China, all central banks have tightened, albeit at different pace and at different times. So this is something which is important, has to continue. Addition to that is fiscal policy. Now, you mentioned this, Vishnu, that a number of people are hurting because of the war and the impact on commodity prices. So it's important that we do everything possible to protect the vulnerable because they've been affected badly by price rise. But the question there is, how do you do that? And here we're saying that it's important for such support to be both targeted and temporary, so that it doesn't become a big burden on fiscal down the road, and also to the extent possible do it in a budget neutral way. So that because the other issue we can talk about is debt in this region has risen. So both monetary policy has to be on a tightening phase, and fiscal policy has to complement monetary policy while providing targeted and temporary support to the vulnerable, so that they are taken care of.
For the last couple of years, all that we've been talking about, and certainly with the IMF as well, is COVID and the impact on the global economy. Do you believe that that countries like India are essentially out, or let's talk about India, is essentially out of COVID in terms of its economic impact? For example, we've got certain sectors which are booming. The aviation and transport sector has started to show real revival. Do you believe the impact of COVID is now over in terms of the economy in India?
So I think, again, one has to look at this from the point of view of a couple of dimensions. If you look at mobility, mobility in response to the Omicron wave, everyone was wondering that, with Omicron, mobility would come down very sharply and so on. What we saw across the region, including in India, was mobility wasn't so affected. Economic activity also was more resilient than one expected, especially in quarter one. Quarter two was because of China slowing, it had an impact. Quarter one, all countries did better than we expected. So in some sense, some sectors have rebounded very well from COVID, but still I would think that the contact intensive sectors are still taking a hit. And that will take some time to unwind. But given the fact that now most countries are approaching the pandemic as endemic, it's the virus is more endemic and not pandemic. I think that means that going forward we'll see things getting better, unless there's a new variant. You never know this, and so that's the worry.
Unfortunately, seems almost inevitable at this stage.
It's one of the downside risks you always think about. And
is that something that you're actually factoring into your calculations, that COVID isn't actually over? I mean, it's just going to be there, lingering in different avatars.
So Vishnu, the way we do our forecasts is we have baseline projections, so we take into account how we see things in the baseline, and then we have downside risks, and there we think in terms of, could there be new variants? And if there are new variants, then it could have an impact on growth, mobility, and so on. So that's the way we do it.
Sure.
And in the case of China specifically, because they have this very stringent zero COVID strategy, what we assume in our forecast is that gradually over 2023, these restrictions will be lifted and things will get better. Now, again, this is something which we're assuming that things get better. Whether it happens or not, one has to see how the government responds to this strategy now going forward.
You'd spoken earlier on a little bit about the United States. Let's talk about the US and their recovery or the lack thereof. They had strong recovery in 2021, 5.7%. But it is expected in your report, you say that it's expected to, and I quote, grind to a stall pace of 1.6% in 2022 and just 1% in 2023. So we've spoken about China. What about the international impact and the impact on India of declining growth in the United States?
So again, I mean, US and China are two biggest countries they account for 45% of world output. So anytime two countries like this slow, it's going to have an effect on all countries, right? And so that's where a slowing China, a slowing US will have an important, will be an important headwind for India going forward. Of course, the question is, do you have offsetting domestic factors which can, domestic demand, offset the slowing in external demand? I think to some extent that's what is happening in India. You see some pickup in consumption. Some people call it revenge consumption.
Yeah.
Capex is forecasted to pick up. So in some sense, you're trying to boost domestic demand to offset the slowing external demand coming from two countries.
Right.
In fact, three countries, or
right.
Euro area put together,
right.
is slowing. So it is going to be a significant headwind for all of Asia, including India.
In fact, just looking at the overall numbers in the Asia-Pacific region, there was a strong rebound in 2021, 6.5%. That's come down to a considerably more moderate 4% in 2022. Again, uncertainty affecting, we've been speaking about India, but if you look at the entire Asia-Pacific region, there is more than an element of uncertainty that persists, right?
Sure, absolutely. So again, just to put the Asia numbers in perspective, we have 4% for 2022, 4.3% for 2023, right? I mean, let's take an average of 4% over the next 2 years. Compare that, the average, historical average for Asia has been 5.5 over the last 20 years.
Right.
So even though Asia is the fastest growing region in the world today, it is still, compared to its own history, it's slowing down quite significantly. On top of that, you add the uncertainty, you add the downside risks. So it is a picture which is, in some sense, in many ways sobering.
All right. Well, Mr. Srinivasan, thank you very much for speaking to us. Well, there you have it. Perhaps a little bit more optimistic in terms of the global picture and the Asia-Pacific picture when it comes to coming out of COVID. There are more than just green shoots at this stage, but there are significant headwinds, whether it's the Ukraine war, it's the United States and growth thereof, or the lack of that, and certainly China remains a concern. A couple of the key issues that the IMF is looking at.